Hey everyone, today we're talking about something that's on a lot of people's minds. Mortgage rates. Are they going up? Are they going down? What's really driving them? No, it's not just the Federal Reserve. So to help us break it all down, I've got a friend and loan originator at Wintrust Mortgage, Kevin Kelling, in studio today. Kevin, thanks for being here.
Hey, it's a pleasure. Thank you so much for having me.
So let's start with the big one that everyone hears, the Fed's raising interest rates. My mortgage interest rate may skyrocket as well. But that's not exactly how it works, right?
No, absolutely not. So the Federal Reserve has an impact on mortgage rates generally. But if the Federal Reserve raises their interest rates by 1/4% or lowers them by 1/4%, mortgage rates on your 30-year fixed rate mortgage isn't going to change necessarily.
Yeah. And that's, so it's not just a one-to-one connection is what you're saying.
Correct.
Okay. Yeah. And another thing that we're hearing lately is that millennials are playing a huge role in the housing market.
Yeah.
What's going on there?
Yeah, so the millennials are the largest generation in our population right now, and many of them are in their 30s right now, and that's when people typically buy their first homes. And that puts a lot of pressure on housing and keeps prices going up, or at least sustains what we have today.
Yeah, that's a lot of buyers.
It is,
Yeah.
absolutely.
Yeah. And what about, we're hearing people say, I'm worried about another 2008 housing crash. Today's environment isn't exactly the same as 2008, is it?
No, in a lot of ways it's opposite. So the way I think about it is I think of demographics, Brandon, as being the reason why we're not in the same kind of situation. Right now, we have 1.9 million households being formed each year, but we're only building about 1.3 million homes. We had the reverse situation in the housing crisis of 2007, 2008, so very different situations.
So it's good to hear there's no repeat of 2008. I don't think any of us want to live through that again.
Definitely not.
What we've been asked a lot lately is, so where are mortgage rates headed? Do you have any predictions, or can you fill anybody in on where you think it will be in the next year or so?
Well, I have no predictions because I typically am wrong, but I do pay attention to those that do make those predictions. And so like Fannie Mae, for example, has estimated that rates will be down around 6.25% by the end of 2025.
But there are several other factors that may impact that as well.
Yeah.
What are some of those factors?
Yeah, so one of the key factors is inflation. Inflation, if it's high, tends to push mortgage rates high. If inflation's tame, or comes down, then mortgage rates will come down. The other is competition for money. You can probably speak to that as well because it's a mortgage-backed security market. What are some of the factors?
Treasuries is another option, corporate bonds, right? It's not just mortgage-backed securities.
Exactly. So a competition for money.
I mean, it's really a complex mixture of inflation, investor behavior, and then kind of the broader economic trend is what we're seeing as well.
Absolutely.
So, I mean, bottom line, it's not all about what the Fed does.
Exactly.
Yeah. Thanks, Kevin, for clearing that up. It's been pretty helpful to have you here today.
Yeah, it's been great. Thanks so much, Brandon.
If you have any questions, please reach out to Kevin or myself and the team at VoiceArt Asset Management Group. Now, let's keep moving forward together.